We still see a very healthy consumer in terms of the transaction activity on our accounts. I think the market turmoil has not yet made its way into the sort of average everyday consumer. We're seeing robust balances. We're seeing robust transaction activity. We're seeing people spending again, going out to restaurants. We're certainly seeing higher amounts of total transaction spend on fuel, not surprisingly.
Right.
But
it's
overall,
kind of
given
choice, right? You have to spend more when it's at the pump.
Right. And, given the current low unemployment rate, we're still seeing very robust levels of direct deposit of people's paychecks into Chime accounts. So it'll be interesting to see how the next 6 to 12 months play out and, if recession actually happens.
You all were big winners during the pandemic. You picked up millions of users. I think at one point you were adding hundreds of thousands of users every month during the pandemic. How many users do you have at this point?
Well, as a private company, we don't announce our active user base publicly, but I can still say that trend has remained consistent. We are opening up hundreds of thousands of new accounts a month. And to be honest, from a business perspective, the advertising market has really opened up quite substantially. So we're seeing some of the best performance that we've seen in recent times. And I think you've seen that in some of the results of some of the social media companies and so forth.
Yeah, I was going to ask you about that. How do you make your money? Because you've got fee-free banking, early paydays for those with direct deposit. They can go negative on their accounts without overdraft fees. You've got credit cards that you offer with no annual fees or interest charges, no credit checks in order to apply. I mean, that seems like the stuff that works really well when the economy's booming, maybe not so well if there is a recession or a downturn. How do you make money?
Well, Chime is a consumer technology company. We're not a bank. We partner with banks that hold our members' deposits in FDIC-insured accounts. So you get all the same protections that you'd get from a traditional account at a B of A or a Chase and so forth. The way that we make money is not through net interest margin or big deposit collection and lending. It's really more of a payments business. So our members use us for their everyday transactions, and we make a small part of that transaction from Visa when the card gets used at the point of sale. The best part about this model is that it's very much aligned with the consumer. We monetize their relationship when they're engaged and using us as their primary bank account, and we've done a really good job at being able to foster those types of relationships and not having to rely on fees. And I think that's the key difference between the way that we go to market versus a lot of the more traditional players.
Yeah, I get that. I think in times of a downturn, again, it's a lot tougher if you're not doing credit checks on people before you give them credit cards. You wind up caught in a trap if the consumer is under pressure because the consumer has been flush. Brian Moynihan told us the consumer is still really flush. But the reason we've seen all this turmoil in the market is there's a concern that there's a recession around the corner. How do you kind of think about that, especially when you're doing this as a software company and not as a bank that does some of those risk assessments?
Well, keep in mind that most of our transaction activity on our accounts come from debit cards. So the money that's being spent, it's good funds. We're not extending credit to the vast majority of our members. Mm-hmm. And the way that our members use us is for their everyday transactions. So this is mostly non-discretionary spend. So even in difficult times, the business model is really resilient because people still have to put food on the table and buy groceries and go and pick up food and all those everyday transactions continue to happen. So it's a resilient model even as we face potential headwinds in the economy.